Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody guys. Well, markets probably will be very quiet today, especially Forex market. The gold market will be absolutely closed. So currently guys, we probably again will take a look at the British pound, because on the euro currency market still stands inside of the Monday swing. So it's really no direction has been chosen yet, and probably today we will not see any breakout. But on Monday, when we will get the results of the referendum in Greece, maybe something we will get finally. So on the Great British Pound, although we see that action is also not very impressive, but currently market finally has reached the level that is important for us. And importance of this level stands on its quality, because currently market stands in the level that separates two different situations on the market. So if market will break through it, that will not be able to treat it as a retracement anymore, and probably will be something different. So in this case, the bears will take the control of the market on the daily chart, and we should be ready for a deeper action to the downside. While if market hold here, it will keep chance on reaching 160 area. Because this is an area where that separates the normal retracement, where retracement should end, and the possible breakout. Here on the daily chart we see that this is not really bad support. This is the low border of this wedge pattern, large wedge pattern. This is also an area of the monthly pivot point. This is 50% support. The trade has been broken, but market has reached a 50% fib level. Okay. And attractiveness of the situation stands in the possibility to place very tight stop if you would like to take the long position. Unfortunately guys, it's very difficult to say here whether the market really will continue move higher or not. But our task is dealing with the probabilities. And what does it mean? It means that we have to find the points that could provide us the best and the greatest probability in our favor. What does it mean, the greatest probability? An area that gives us possibility to place very tight stop. And we know that if we will place stop somewhere, it means that stop stands in an area where our initial setup will fail. So we place stop there where we definitely know that if market will reach this area, it means that our setup and our context for trading will be destroyed. And currently that's particularly the situation that we have here. That's particularly the level that gives us the best probability on our side. Maybe this setup will fail. Maybe market will trigger our stop, but this will not be the mistake in our trading. On the hourly chart, a bit later you will understand what I'm talking about. On the hourly chart, take a look. This market has completed all patterns that suggest normal behavior of the market with the retracement. First of all, take a look. Market has completed this ABCD pattern. It's right here. As we said yesterday, 55.70 approximately. Also, market has completed the breakout of this rectangle down. So market has passed down approximately the same distance as the width of this rectangle. Finally, market not just completed the retracement patterns, but also market has completed the reversal pattern. It's a butterfly. It also has completed 1618 butterfly. So as market is forming the reversal pattern to the upside on the strong support area and completes all patterns that we have here, what else we could demand and what else we should wait from the market? What else we could count for? Definitely market has done everything that should be done in a retracement. And here it has only, in fact, one choice, either to reverse to the upside, or it will prove its inability to turn to the upside, and that will lead to the breakout of the support area. But right now, as this hasn't happened, we stand in an area that's very attractive from the risk and the reward point of view, because since market has completed all the patterns, it has no reasons to show any Russian rinses of these lows, any downward spikes or something of that sort, because all targets have been hit already. The one reason why market could show move down is the real breakout, and we could place the stop very tight here, because if we will take the long position, and market already has completed all patterns and has no reasons to move lower, if it has real intention to continue move to the upside, we could place stop very tight. So if you'll take a look at the 4-hour time frame chart, you could use this pattern, that's high wave pattern, to place stop. The stop could be placed slightly below the low of this high wave, because if market was taking out the lows of this high wave, it means that something's going wrong with the bullish setup, and it means that market has chosen the bearish direction. But meantime, until market holds here and shows any attempt to move higher, this really could happen, and the market could reach the 160 area if it will hold around this area. So I think that's probably, guys, clear that market stays at some kind of the break-even point that separates the normal retracement and possible breakout. So moving lower will lead to breakout and the bearish trend starting. Here's the area where a logical retracement could reach, but market should not move lower because market already has completed all patterns. Well, that's been said, what could be done? So you think by yourself whether you would like to take the long position here or not. But since market stands at the strong supported area and keeps chance on the possible upward action, it has absolutely great risk reversal as a risk reward ratio. So if we'll place in stop slightly below these lows, and it's 160, that's just will be a tremendous risk reward ratio. You should think by yourself whether you would like to take long position here or not. But that's the culmination point of this retracement. Here market either will turn to the upside or will drop significantly, and when new trend will be established here to the downside. So that's our current view on the Great British Pound.